Market opened down 7%, a complete shit show, and trading continues to be halted as circuit breakers trip. MarketWatch.com financial news also keeps going down. Here are the price levels, based on the market regulations. The following circuit breaker rules will apply for today if met, based on SPX prices. Level 1 to 7% decline 15-minute trading halt. Level 2 to 13% decline 15-minute trading halt. Level 3 to 20% decline trading suspended for the day. More info. Of note, if the SPY hits -600, trading for the day is closed. I don't remember that ever happening in history, perhaps back in the Depression crash. Folks, this could be one that would be remembered for decades. Wild ride ahead for sure. I bought into the dip and looking to shift some more so I can take advantage of this. I've not educated myself on options, so not playing that game. Thank you for the alert. Please keep us posted of developments throughout the day. Robinhood, the trading app of millennials and Gen Zers, also keeps crashing. Second time in so many months. Proof that anything free tends to have a hidden cost. I heard the app crashed because they hadn't coded for February 29th. They now have a gold version of the app, $5 a month. Still better than $5 a trade, I guess. I'm interested in puts as one of the hedging strategies to try out against adverse movements, but I don't think I'd be able to learn and put it out in action in time, and I haven't many positions to hedge. In my own home country though, stocks are taking a quadruple whammy, especially when the government went to crap overnight. Oil price tanking means my country as an oil producer banks in less oil money, and the virus. It's a matter of time before the SEC swarms in. I read our Wall Street butts for the memes and crazy trades, and those folks just never stop exploiting for unlimited margin and box spreads. I thought RH gets its earnings from interest on the folks' cash accounts and stocks. Not enough revenue from there? Is this officially the end of the bull market? Heard a guy say, oh, the market's going to hell. Guess no one can retire. Guess people should have read the such slow lane a mindset. I've sat out of the market 3 years because I thought it was overpriced in August 2015. Even when I was a teenager who loosely followed stocks in 2006, I thought things were overpriced. Seems I'm a few years ahead of the herd in realizing I have never been right about the exact thing that causes a crash. Just like Nassim Taleb's Black Swan concept states. This is crazy. Last month I pulled several $1,000s out of mutual funds. I'm planning to use the money in a few months and I figured the market would dip soon, wanted to be safe. The market kept going up instead. Husband would make jokes about how I should have waited a few more days. Everyone knew the market was overpriced for far too long, yet the different mechanisms installed after 2008 made a bubble explosion difficult. Read articles published in 2019 on the possible upcoming 2020 recession. It is quite interesting. What we see here is a slow explosion of the market triggered by the coronavirus epidemic. TBH, it could have been triggered by anything else, but well, it is like that. Now, why was the market overpriced? Money has been cheap for a long time now. This money was invested into the market, which saw itself having too much money and inflated stock prices. As long as companies were profitable, why stopping? Then the virus appeared in China, markets panicked to see companies' profits falling because of the disappearance of Chinese consumers, and suddenly, everyone remembered that in fact, the stocks were overpriced anyway. We now know that what happened in China will also happen in the rest of the world, which means an even bigger blow for companies. Imagine, after not being able to sell because China couldn't deliver, your own clients are placed in quarantine. So overpriced stock market plus impossibility to get supply plus impossibility to sell merchandise plus future recession equals a financial balloon slowly deflating to come back to actual prices. Although as we speak, many companies are undervalued, the time to buy is between now and the next 3 months. It is interesting because quite unique. In the 1929 or 2008 crash, the economy was down because people did not have money to buy. In our case, people have the money, but cannot physically go buy. So more money is only going to partially solve the problem. What we need is to get people out of the house and into the shops. I am pretty sure we'll remember this day for a long time. It is historic. Sad, but historic. Officially called Black Monday with a wiki article now. It just sucks when you saw it all coming but didn't have enough time to prepare for it. Time to boo, i.e. time to buy lol. Can you imagine trying to retire by going all in on these indexes? 2 months ago at an all-time high you're planning your vacation on the beach and 2 months later it's all gone and then some. Wow. Wow. Wikipedia acts fast. That's even one of their better posts with dozens of citations. Futures are up a few percent on the Trump's mention of payroll tax relief. My guess is that strength won't last until morning. I think the bottom, as I mentioned last week, is around SPX 2500. I think the news of crude dropping along with the growing fear of the threat of CV worldwide really set the stage for the plunge this morning. I watched it open, and it almost seemed as though everyone just knew the circuit breakers were going to trip, and within just a few short minutes it happened. The huge concern regarding CV was the driving force, but oil prices plummeting overnight was the straw that finally set it in motion. I for one don't believe this is anywhere near the bottom yet, and tomorrow Tuesday. My guess is it will gap up in the AM and open at 3,100 or so. I think there is a bit of wind in them sails yet, but won't last the day and close out again lower, but not much. Have done quite well the past few weeks, but this drop today was a punch in the gut. OPEC wasn't even considered in the equation 48 hours ago, at least for me. Hope to pull off a Hail Mary in the AM with a few stranglers. Then all cash on the sidelines for fire sales. The US should tariff Saudi Arabia and everyone else selling into the US market and float a $40 a barrel price. If anyone's looking for UK news and views, then the Financial Times has started a couple of group chats on Telegram. FTAFE Markets Live is where they give commentary on what's happening, and FTAFE Readers is where anyone can post. Lots of interesting chat and people more in the know than me there. I don't think you need to be an FT subscriber to join. Here's a wild video about the lengths they might go to prevent a recession. If they don't do this well, yeah, it's recession time, baby. TLDR, they are passing a law in Oz banning cash transactions over 10K to prevent people avoiding tax. OCR is already 5%, needs to drop 3% to prevent recession. Something like that. You'd have to pay banks to keep your money as interest rates would be negative. New law means you couldn't just keep your cash under your mattress. There's an official report with a bunch of other ideas for how to prevent people using and hoarding cash if interest rates went negative. They talk about some of the ideas in the video. The idea of negative interest rates is to force you to spend money and consume to keep economy alive. So I haven't really been following the recession thread, but I've noticed everything crashing and whatnot. Obviously for some industries this is temporary, as in, airlines. At some point they will bounce once this is all over. So would this be a don't miss this time to buy type of thing? Airlines were the only industry I could come up with, but do name more. Thoughts? I just broke 10K in savings for my down payment, so my OCD me wants me to stay at 10,000 even lol. P.S. My procrastination in rolling over my little 401k paid. I wonder how much value I would have lost on the little 5K sitting there. On second thought, what if I used those 5K to buy some? I just purchased shares of airline stocks and selling calls expiring each Friday. What do you think of this strategy? AL is already down 50%. If it keeps going down, I will just recoup my money with selling calls since volatility is so high. So I buy 3,000 shares, and sell 3016x calls for $2,700. Scenarios. If AL stays flat, I will make $2,700 if AL goes up more than $16.90. I will make $3,500 if AL goes down $14.80. I will break even if AL goes down even more. I will sell more calls next week. My common sense would be that even if it goes down some more this month and the next, at some point it's going to rebound. It just has to. This will be over at some point. Then again I'd about trading. I bought Shell and ABINBEF thinking they couldn't go any lower, and it taught me two things. 1. Don't hope stocks will soar at the beginning of a bear market. 2. It can always go lower as long as it has not reached zero. Based on recent events, airline shares will actually keep on diving as the WHO has just declared world pandemic on corona. I would buy puts on shares that have not suffered too much yet, the infamous stay-at-home index, because as the world paralyzes, they dive like anyone else. Well, one thing is that many people will not be invested in single stocks but in index and high-yield ETFs, which makes the movement of courses somewhat counterintuitive. You might think that food goes up in such a situation? Nope. It is a major part of most ETF shares. In my opinion, you see here not just the effect of the coronavirus going on but what some people call the ETF bubble. I mean, downturning in recessions is normal. The question is in which dynamic, and we have seen now a decline of 20% within 4 weeks. A median bear market is around 4 months. Now you can make your estimates. Looks like tomorrow might be part 2 of the crash. Futures down big again with the European travel ban. Could have an open in the 250s SPY. Selling calls in a bloodbath is like bandaging a gunshot wound. Sure, the bleeding slows, but the dying just takes longer. It helps minimize losses, but it is not necessarily a sure thing. Your post seems confident in the strategy. Hope it works out. Ha. Not with the travel suspension to Europe. Oh well, I'll just hold and keep selling calls. I really like Trump on policy, but he's just not the kind of person who's good at this kind of thing. Whatever the markets were expecting to hear, they didn't hear it. I expect this to be a level 2 day. Turmoil. I have never seen anything like this before. Everything is hemorrhaging. Watching people say buy the dip. It's time in the market, don't time the market. All of it makes me want to vomit and slap them, lol. 7% dip right on market open. Utter chaos. That coupled with the BTC drop at around 30% just 4 hours prior. Never seen anything like this. Can't see a bottom anytime soon. Even gold has been plummeting. I expected this one to be the store of value for when people sell their stocks. Where is all the money going? Cash to pay margin calls. Is anyone using this as an opportunity to buy? I was thinking to finally buy into an index, but I don't think we're at the bottom yet. I know that no one knows when that could be, but with Corona it looks like things are going to keep getting worse for a while. Things might be at discounted price, but I fear buying today will just result in further loss. I mean, everything is getting shut down, even the NBA. I figure it's best to wait it out for a while. Mohamed El-Erian, chief economic advisor at Allianz, says it would be better to wait a bit before putting money to work. I saw that. Gold, silver and crypto are all just crashing like crazy. I figured they at least would somewhat hold their value, especially the metals. Silver seems to be holding and higher than last year same time. One school of thought is the when in doubt, get out mentality. The second is that there are a high number of margin calls going on this week, so other assets are being sold to raise cash to cover those. We called it Black Monday, but it was probably Grey Monday. This is Black Thursday. It's amazing what's happening because the margin calls are wreaking havoc on the stock prices. OTC stocks are dollar for dollar, meaning they're not marginable but they are used as collateral for margin accounts. Market managers in OTC stocks are backing off of the bid prices, watching margin calls happen, and scooping up buckets of OTC stocks that are being sold to cover at 10% of the regular trading price. The holder of the margin account that busts is powerless as non-margin holdings are sold way below market price to collateralize margin calls. Everything is liquidated. This is the second day in a row of this, which makes sense because typically a margin call has 3 days to cover. The bloodbath started yesterday on the third day of the trading week. The VIX is at 77, nearing an all-time high, which was 89 back in the 2008 market crash. Markets are already back to early 2017 levels. Firefolks' retirements are getting pushed back by years in just a matter of days. I feel sorry for the slow laners. Hopefully those on the forums can take it as further proof of the risk in the slow lane strategy. You are at the complete mercy of any random occurrence, such as a virus. In the span of 35 to 40 years of saving, it's not a question of if, but a question of when. I disagree here a bit. Such random occasions, floods, hurricanes, disruptive technology etc. can hit any business, any industry. As I can shift from airlines to bonds, I will have to adapt to my customers. I will have better and worse time. But the feeling of control and redundancy is or can be made higher, yes. For example, I hope you don't have an FBA business when Amazon shuts down. You don't spend your entire life waiting for your Amazon business to make you rich only to have it get shut down and lose all your money one day right before you retire. You make a lot of money very quickly, keep that money, and pivot into something else or retire young if it gets shut down. Not sure which version of you read, but it wasn't the same book I read. PSA, the market is up. The last time Trump spoke, the markets took a swift decline. If he announces a CV-positive conference starts in a few hours, it could send the markets plummeting off this rebound. Consider the market is on a small rebound today. It could be an opportunity to buy some puts. I normally would never recommend buying puts at a VIX 72, but that volatility isn't going to go away for a few weeks. Hold time would be a few hours to a few days. It was the one with the money systems at the end which I think contains stocks. A huge amount of stocks. Which has nothing to do with Amazon shutting down if you had an Amazon business. I posted this in the other thread, but this might be a better place. Also of note is volatility, which to me, is the bigger indicator. The last market rebound had very little reversion, which indicates the rebound wasn't trusted. This one had some power to it because the VIX backtracked 20% plus. Still, at 50 plus, it doesn't portend the end of this, just maybe that the low has been locked in. News reports have stated it is the end of the bull market. I am, however, still trading with a bullish long outlook. The big question traders or investors always ask is it priced in? Does the market already reflect all the closings, the cancellations, the lower consumer spending, and the lower earnings reports? A big question to ponder for anyone investing. You've said a couple times over the past 2 weeks that you maintain a bullish outlook. What's your guess for the next 18 months? Goldman Sachs said we're going to have a recession but then a strong recover Q4. What do you think? Monday open. Blood in the streets. Germany are closing their brothels. Hi everyone. I think you guys investing on the US stock market should wait a few weeks still because the shitstorm will strike even harder in the US when a strong quarantine will be imposed in every state. Just like what we see in Western countries. ATM, greater than the unemployment rate is a good indicator, 3% ATM, it will raise up to 20% IMHO. The real crisis won't come from C0VLD19, a vaccine will be developed within a few months. The pandemic will be healed. The real depression will come when the Fed decides to raise the short-term interest rate. Then, the dollar goes up. Emerging countries' currencies get weaker or dollar A lot of businesses go bankrupt and a credit crisis follows because the debt market is huge right now, bigger than the housing bubble of 2008. The true crisis will be a credit crisis. So two things to watch really: the unemployment rate, wait until it gets up to 20%, the interest rate on the dollar. A raise will trigger a credit crisis. Agreed on everything, except to vaccine in a few months. I think it will take longer than that. I think it might be a while to wait. Thanks for your assessment and opinion. What you guys think will be the bottom of the market? The S&P 500 is currently at 2.240. I think that is pretty low and I don't see so much space to go even lower. Still too high, will go under 2,000. I don't know 100%, I don't have a crystal ball. However, today Canadian provinces have started shutting down all non-essential business. I imagine at the rate US cases are growing, they will either follow suit or even worse declare martial law. That will push the market down much further, not to mention the rampant following unemployment. I see the situation becoming a recession, borderlining depression. Currently, there is no indicator that we are coming out of this yet. So the S&P 500 will hit rock bottom in the future. Forecast is 1600 to 1800. My boss was planning to retire in 3 years at age 62. Now he will retire by 65 if he is lucky. Retirement or the lack of is the elephant in the room. Is anyone else trading options in this crazy market? I've been going long on some calendar or diagonal spreads, both calls and puts, and selling credit spreads and some naked options trying to take advantage of high 4. I'm rather bearish in the medium term, although just closed out some SPY calendar put spreads today because I felt 4 would be against me. I think it will be a slow decline though, so no more for spiking. VIX is still in backwardization until September, so still bearish outlook. It starts to flatten after that, so maybe market is thinking that's when things pick back up for now? At this point I don't feel confident owning anything that is VIGA positive though, so probably still going with credit spreads in the short term. And maybe looking at long-term calendar spreads 1 year out long call, since calls are pretty cheap even with current 4. Like a Jan 21 280C is about 60% underpriced right now. 4 can halve and it would still not be overpriced. I would then be selling shorter term calls against it, poor man's covered call. If I had larger capital I'd be selling puts, like MJ suggested in another thread. Is there still an active options thread on the forum? Maybe in the insiders? Big motivation for me to achieve my financial goals. My parents were set to retire next year. They should have retired 5 years ago. I don't want them to work anymore. The way I understand the weird drop in gold or silver is that it's simply investors liquidating their positions. Keep in mind that the GRS you probably are referring to are the ETF's paper GRS and not the price of owning the physical gold and silver somewhere. There are several on the inside, although I wouldn't call them active. They get a few posts per week. Lots of folks do trade options. I do regularly, and when I find something interesting, I post in there. My active options trading account is up for the year. My paycheck pot, obviously, is down. There are 2 insiders threads. One for beginners and one focused on MJ's strategy.